What's up, investors? Today we're diving into one of the most talked about small-cap aerospace plays on the NASDAQ, XTI Aerospace, ticker symbol XTAI. These guys are trying to do something absolutely wild, merge helicopter flexibility with jet-like speed using their flagship aircraft, the TriFan 600. But is this the next 5X stock or just a high-flying dream? Stick around. I'm breaking down everything: the tech, the financials, the risks, and the potential upside. So, who is XTI Aerospace? They're an American aerospace company developing the TriFan 600, a hybrid aircraft that can take off and land vertically, then transition to high-speed forward flight. Think helicopter meets private jet. Their goal? Revolutionize regional travel, VIP transport, and eventually emergency and defense missions. Imagine flying city to city in under an hour without needing a runway. Big idea here is advanced air mobility, a market Morgan Stanley projects could hit $9 trillion by 2050. We're talking about a future where short-haul flights are handled by VTOL aircraft, faster than cars, cheaper than helicopters, quieter than jets. XTI isn't alone. You've got players like Archer Aviation, Joby, Lilium, and Vertical Aerospace, but XTI's hybrid approach gives them unique range and performance advantages. The TriFan 600 uses 3 ducted fans, 2 on the wings, 1 in the fuselage. They tilt for vertical lift, then rotate forward for jet-like cruise speeds over 300 miles an hour and a range of around 700 miles. XTI even teamed up with Oak Ridge National Laboratory to run over 1,500 supercomputer simulations to refine aerodynamics. That's serious R&D commitment. This hybrid power design also means less dependency on battery tech than full electric eVTOLs, a smart move given current battery limitations. In 2024, XTI reported about $3 billion in conditional pre-orders and reservations for the TriFan 600. Huge vote of interest if they can deliver. They've added key talent like Steve Griesel, former Paramount Group CEO, to their advisory board, expanding their defense sector expertise. They recently raised about $16 million through a public offering to fund prototype development and certification work. All right, investors, let's talk numbers. XTI is still a pre-revenue company, burning cash as it develops its aircraft. They're funding progress mainly through equity offerings, which means dilution risk for shareholders. Typical for early-stage aerospace plays. You're betting on future success, not current earnings. Keep an eye on share count, warrant exercises, and future funding rounds. Liquidity is the bloodline of innovation, but too much dilution kills upside.
The growth story here is exciting. Regional mobility, city-to-city routes with no runway. Corporate and private aviation, fast, flexible travel for executives. Emergency response and defense, where vertical lift saves lives. If TriFan 600 nails certification and flight performance, XTI could lock in high-margin niches long before full eVTOLs scale up. Of course, competition's fierce. Giants like Joby Aviation, Archer, and Lilium already have billions in backing and deeper R&D pipelines. XTI's hybrid strategy could help them stand out, but FAA certification is brutal. It's expensive, slow, and unpredictable. Add to that capital intensity, supply chain hurdles, and investor patience running thin during development delays. This is not a stock for the faint-hearted.
At today's microcap valuation, the upside looks massive, but it's speculative. If TriFan 600 becomes reality, we could be talking about revenue potential in the hundreds of millions. But if delays or financing issues hit, the downside is equally steep. That's why smart investors treat this as a moonshot allocation. Small position, big potential. You don't need it to be certain, you just need it to be possible. So, if you're watching XTI Aerospace, here's your catalyst checklist. Prototype or test flight updates. FAA certification milestones. New partnerships or pre-order announcements. Capital raises or debt financing terms. Progress in their RTLS tech division.
Any positive move on those could spark major interest in the stock. So, here's the bottom line. XTI Aerospace is high risk, high potential. They're combining real aerospace engineering with a massive market vision. If they execute, it's game-changing. If they stumble, investors take the hit. For me, this is one of those stocks to watch closely, because if the TriFan 600 takes off, so might XTI's share price. Alright, legends, if you found this breakdown helpful, smash that like button and subscribe for more next-gen growth stock deep dives. Comment below, do you think XTI Aerospace can really take flight, or is this another overhyped microcap? I'll see you in the next one. Stay sharp, stay invested, and fly high. Airplane money. This video is for entertainment and education only, not financial advice. Thanks for watching GoKinvestor. See you next video.